Okay, it's after 5 o'clock. We'll go ahead and get started. If we'll call the roll first, please.
Okay. Mayor Mitchell? Here. Commissioner Kaler? Commissioner Stinnett? Here. Commissioner Caskey?
Here.
Phyllis Crisp? Commissioner Lewis? Commissioner Carver? Here. David Merle? Sheriff Braun? Here.
So you don't have, I mean, 5 out of 9, excuse me.
Okay, we have 4 out of 9, so we lack a quorum. We will go ahead and proceed. Since we have information only, we'll go ahead with the information. Where is the emergency thing?
Oh, Mike.
Okay. If you go ahead and roll the emergency announcement, please.
Before we get started, let me read the emergency evacuation procedures. In the event of an emergency evacuation, an alarm will sound. Everyone should exit the building by way of the nearest stairwell in a safe and effective manner. If the nearest stairwell is blocked by smoke, use the other stairwell. Do not use the elevator. Once you have reached the main floor, follow the exit signs to exit the building and quickly proceed away from the building. Please be mindful of others evacuating and of emergency vehicles.
Next item is input on items on the agenda. If anyone wants to speak on any item on the agenda, seeing none, we'll stand for approval of the minutes. We will move those to the next regular scheduled meeting. Revenue and expenditures. Turn it over to Jenny.
Okay, thank you. For those of you in the audience, Jody has that on the screen. It's probably going to be a little hard for you to see. All of you should have it on your computers in front of you, and then this information will be included on the website after our meeting is done. So for the month of March, you will see that we had $1,587,518.19 in revenue, and our expenditures was $1,572,967.04. So had a slight increase there where we actually had some more revenue than what we spent in expenditures. I do want to go ahead and talk about something with this report. Most of you, I believe, are aware that we do have a new accounting manager, Dina Finley. She's in the audience with us today. And she and I are going to be meeting next week and in the coming months to kind of go over all of our processes and procedures in the reporting format and how we present this information to you. And really just look at that, make sure it's being presented in the best way possible. So when we excuse me, when we come back to next month's meeting, a report may look a little different. We'll just have to see what we end up doing when she and I meet, but I just wanted to go ahead and put that out there for you as well. Any questions?
Last month, it exceeded it by $300,000.
That is correct.
This is actually better than what we forecast, is it not?
I don't. If you'll remember, and Carrie, Carrie with CBiz is here in Cole's absence today, so I may have her speak to this point. But we did have some runoff claims from Humana that we were still paying on in this first quarter. So as we move forward, I don't know if how it's going to work or how it's going to look, but I mean, it does appear for as of right now, that we had a pretty good month. Our claims seem to have subsided a little bit, or at least our high dollar claims, it appears. So yes, I mean, it looks like we're doing okay for now.
Reason that our expenses prior to January or prior to February were so elevated. I mean, we've got September 19, 1 million, 1.9, you know, 1.8, 1.8, you know, what's, and then in February we were 1.1 and we're back at 1.5, but it's still considerably less than, what's,
Sure. So with our vendor changes, we
Yes.
received quite a big discount on our administrative costs. So Humana's administrative fees were a lot higher than what we're paying now for Allegiance, as well as what we're paying Caremark to administer the pharmacy program. So that's a portion of it. Our administrative fees are not as high, and with the discounts that they have provided to us, I feel like they're negotiating better rates for us on our claims with doctors and those sorts of things. We're getting better deals on our portion of what the county's having to pay to cover the claims and those fees.
okay. That's not happening because the employees are paying more. That's happening because we're making better deals with the doctors, okay?
Correct. It's in part to the discounts that we've received just on the administrative fees, and then those deals that our new providers, our TPAs, are able to work on their side with dealing with the doctors' offices and pharmaceutical companies and those types of things.
That's all.
Anyone else? Benefit updates? You gonna do that? Okay, turn it over to Jean.
Thank you. Okay, what's that? Go to the next screen there, Jody. That one, yes. Okay, in your packet, you will see a document that says 2016 Benefits Plan 2 Enrollment Data. So as you are aware, the commission approved a second plan offering for us to offer to our employees, and with it to take effect on June the 1st. And so what we had originally sent out was as of last Friday, the 15th, and I've updated this information as of today, so we'll get these numbers updated on our website. But we've had 22 total employees, and that includes some of the retirees. So we've had 5 general county employees, which does include the sheriff's office, 13 school employees, and then 4 retirees elect the second option, so the lower deductible plan. And then I provided for you how that breaks down. So what type of coverage did they select? So 12 of the 22 elected employee-only coverage, 4 did employee plus spouse, 1 did employee child, and then 5 did the family coverage. And again, this plan will take effect June the 1st. And we are sending electronic files to Allegiance weekly on Wednesdays. We send a file every Wednesday, and that will include these enrollments. We're in the process of getting these keyed into Chronos over the course of this week and next, and so that information will go on the file to Allegiance when we send that tomorrow, and then again next Wednesday. So that they can get everything up to date in their system, and they will generate the employee cards and kind of a little welcome pack for the employee for that plan, and those will go out in May, so that the employees will receive them prior to the June 1st effective date. Any questions on that? Okay. The next update that I have for you is on our Affordable Care Act look-back period. And I'm going to summarize this as best I can, and then I'm going to recognize Carrie Presley to answer with CBIZ to take care of a few more specific information for you. But at the time when the ACA was first being introduced or rolled out, the decision was made here at the county to have a 3-month look-back period for variable hour employees. And a variable hour employee are those employees who are not reasonably expected to work an average of 30 hours per week. So that's most of your part-time employees that work less than 30 hours a week. And so after several discussions with CBIZ and our medical TPA, Allegiance, we've determined that adjusting this look-back period makes the most sense for us at the county, and we're going to adjust it basically to a 12-month look-back period. That's going to include a 28-day administrative period, which will allow our office in HR to take care of getting the person enrolled in the plan and making sure that everything happens correctly there. And then it would provide 12 months of coverage for the employee. And this is just going to help us to more easily track the employee hours and then make sure that our coverage is being offered correctly and timely. And I think it really helps us to become more efficient in our administration of the plan in regards to the ACA and that look-back period. So it's pretty much that in a nutshell. If you have any questions, I'll do my best, and if I can't answer it, we can have Carrie take a stab at it for us.
I actually have a question on that. The look-back period, does that apply to every department, including schools?
Correct. Yes. Anybody that's on our insurance, we would have to extend that look-back period to that group.
So if they could not decide then that they wanted a different look-back period as allowed under the ACA?
You mean like the school system couldn't have a separate look-back period as the county?
Yeah, that's what
I'm not 100% positive on that, but I believe the answer is no. I'll defer to Carrie if that's okay, if we can recognize her to answer that part of your question. Is that okay?
Yes.
Okay.
Yes.
Sorry. Come on.
That's an understanding, with their being part of the same plan, it would be administered all under the same plan. So you would have one look-back period, which would be the 12 months that's decided upon, and the same stability period for that.
What if the teachers' representatives negotiated with administration and came up with something else as allowed under law?
And there are the 12-month look-back period is not set in stone, black and white. You have to pick that one. That is what we decided upon based on information we received from the TPA, and it'd be a little bit easier to administer, but it's certainly something that we've looked at multiple different options. So it could be that the teachers saw that they would prefer a 3 or 6 or 9 month measurement period, which is allowed, but the decision is being made at this time to include a 12-month measurement period for the entire plan. That's not required by the ACA, but that was just our recommendation in the 12 months.
Right. That's what I was trying to get at. It's not a requirement, it's a recommendation.
Correct. Yes,
Right.
It could be different.
Okay, thank you.
You're welcome.
So I have a question. So if, say, the schools did go to a different type of look back, would that, you're saying the entire county would go to that time frame, or just the schools?
Correct. So we would need to decide upon one for the entire plan. It would be different if the school system had a different plan, or if they were enrolled in another plan, then it would be separate, but we would decide upon one look back period for the entire plan as a
Okay.
whole.
Thank you.
Anyone else? Thank you.
And I have one more update to provide regarding the policy for our benefit termination dates. The current policy for our benefit termination dates states that an employee coverage would terminate on the last day of the pay period in which the employee leaves employment. And this policy is now outdated since our pay periods have changed from semi-monthly to biweekly paid in arrears. And making this administrative change is going to help us to ensure consistency. It'll help create clarity in the terms of when that termination happens and how that process works. It'll help us to have a more accurate picture of the payroll deductions that we take out of each paycheck versus what the actual reconciling of the accounts and the invoices that we're paying and all of those things. That, as I mentioned before, that I'll be working with Dina on to make sure that all of our pieces of information are connecting the way that they're supposed to. So the way that we're to make a change on this is basically if an employee who is terminating in the month receives one check in the month. So let's say somebody terminated on April the 6th and they receive one check in the month, then their benefits would last for half of the month. So their benefits would go through the 15th of the month because they paid for them out of that one check. If they terminated, like, for example, on today, the 19th of the month, they will receive 2 checks in the month of April, paying for the entire month's coverage, so they would have coverage for the entire month. It makes it much cleaner from the accounting perspective. It helps us administratively with the termination process of the benefits and working with the TPA to make sure everything is covered that way. It keeps it cleaner for us. So it'll help, I think, keep things smooth on all parts of all of the pieces, from the accounting, the payroll, and the HR piece of the benefits administration. And that's all I have. Thank you.
Thank you. Next item on the agenda is input on items not on the agenda. Nope. Okay. I'll recognize Jenny.
There we go. I received an email today. As you all are aware, we are doing an audit on Humana and how they have processed and paid our medical claims going back for a period of 18 months, I believe. I received an email today from the company that's doing the audit that they are on track to have a preliminary report to me by the end of the week. So hopefully nothing happens, and that does happen, so that when we meet next month, we will have that report to review as well.
Thank you. Anyone else?
Grady,
Yes, sir.
I'd like to ask Jenny if going from our old policy to our new one, moving, have we had any problems? How's that going? Are we, for instance, in our drug, the administration of that, is that happening smoothly, or are we having issues?
Are you referring to the changes that we made from 2015 to 2016? Yes, ma'am. Okay. I mean, it is going as best as can be expected, considering all of the amount of changes that happen. We have had some, calls and concerns about how things have been processed, or a certain prescription that maybe wasn't covered correctly, that we have reached out and taken care of, resolving any issue that we've been made aware of.
Anything else? Stand for motion to adjourn. We're adjourned.